Well, we're going to have to pack everybody in. I don't apologize. I am thrilled that we've got so many CEOs that are here today, and I want to welcome everyone to the night studio at the Newseum for what we think is a very important press conference. I'm John Engler, president of the Business Roundtable, and as you can see, we're joined by many CEOs of the Business Roundtable, an organization that represents more than $6 trillion of economic activity in this country, more than 14 million employees. So it's a pretty significant slice of the American economy. And today you're going to hear from Jim McNerney, the chairman, president, and CEO of the Boeing Company and chairman of the Business Roundtable. Andrew Liveris, who's chairman, president, and CEO of the Dow Chemical Company, and he led the Roundtable Executive Committee in developing the CEO plan for jobs and economic growth that we're releasing today. And also Bob McDonald, chairman, president, and CEO of the Procter & Gamble Company. I won't try to make all of the introductions of all of the CEOs. As you can see, we have an impressive array of leaders from across the country. Last night we heard from the president and had a very good dialogue, what turned into be about an hour and a half. This morning we met with the Blue Dog Caucus from the House, and our meeting at 10 o'clock, so we will be trying to be succinct this morning. We'll start off with the Treasury Secretary, Tim Geithner, and then we'll be spending some time on a tax panel that Larry Kudlow will moderate. But our objective this morning is to release a comprehensive strategy for accelerating U.S. economic growth and getting America working again. We're well aware that a mere 1% increase in GDP in the country can add over $1 trillion to U.S. revenues. So economic growth is an important cornerstone for getting America's fiscal problems resolved. And so I'm going to start this morning by turning the podium over to Jim McNerney. He'll be followed by Andrew and Bob, and they'll talk more about the CEO plan. We'll try to make our remarks in about 50 minutes, take some questions, and then stop promptly at 9:59 if we can pull that off. So Chairman McNerney, the podium is yours.
Thanks, John. Thank you. Thanks, John. And good morning, everyone, and thanks for joining us today. The Business Roundtable is holding its first quarter meeting here in D.C., and we have about 100 CEOs, which is a pretty representative number of that group that John mentioned, and obviously John leads. And today we're focused on one thing and one thing only: re-energizing this slow-growing economy and putting America back to work. America's CEOs believe deeply in the fundamental strength, resilience, and potential of American business. We have confidence in our country's ability to overcome its current challenges and return to growth, prosperity, and rising opportunity for America's workers and their families. However, we cannot be successful if business and government remain divided, and Washington itself remains divided on priorities for accelerating growth and job creation in the private sector. Despite hopeful signs of economic recovery and some public policy progress, such as the recently passed free trade agreements, America remains mired in a deep jobs crisis. 1 out of every 12 Americans who are willing and able to work cannot find a job. Approximately 13 million Americans remain unemployed. These are sobering statistics with devastating consequences for American families. Unfortunately, in the midst of this crisis, America's political system is, at best, moving at a slow crawl, while economic competitors are shifting into higher gear. They are not waiting until after the November elections to make meaningful policy changes, and we shouldn't either. America needs a jobs and economic growth strategy and a business environment that encourages U.S. companies to invest, grow, and create new jobs. If Washington and business can once again find the ability to get aligned on fundamental priorities, American business will once again unleash America's economic potential. That's what we're here to talk about today. To tell you more about our jobs and growth strategy, I'm going to turn it over to Andrew Liveris, who led Business the Business Roundtable's executive committee on this, and authored, I would also say, in its month-long process of developing our solutions for America. So without further ado, Andrew.
Thank you. Thank you very much, Jim. Thank you, Jim, and thank you all for being here. All the CEO members of the Business Roundtable, substantial amount right around me here, endorse what Jim has just said. There's no question that America needs a strategy for job creation and for economic growth, and we can't afford continued inaction from Washington. In Taking Action for America, the publication that's been referenced and that's on the screens, we have laid out a very comprehensive plan with a detailed, pragmatic, and the key word, actionable set of recommendations for Washington policymakers to strengthen the U.S. economic recovery and put Americans back to work. The plan basically has three broad categories, and I'm going to list them. First, America must put in place a set of policies that allows it to compete on a global stage. That means fiscal policies that encourage growth. It means smarter regulations that aren't overly burdensome, and it means a competitive tax system. Second, America must leverage its competitive advantages by opening up new markets for international trade and investment, by ensuring that U.S. technology assets have strong IP protection, and by pursuing a set of policies that encourages production of affordable and domestic energy sources of all kinds. Third, America must invest in its most valuable resource, its workers and their families. We need an education system that prepares America for the next generation workforce, and we need to make sure our workforce has access to quality health care and a chance for a stable and consistent retirement. These are not optional, they are prerequisites for sustainable economic growth. Now, after a minute here, I'm going to turn it over to Bob McDonald, but let me just dive into one specific area of this report, and that is smarter regulations. BRT CEOs have consistently identified, as recent as even this morning, how we are living with overly complex and costly federal regulations, and these are major impediments to business investment and economic expansion, and they are real time. Let me be clear. We are not opposed to regulation. We are for regulation. But on the contrary, we need to be engaged in well-conceived, front-loaded, science-based dialogue at the beginning of a process that are essential to protect human health and safety in a modern society. Speaking personally, I can tell you that my company, Dow Chemical, wants science-based regulations to help protect workers and families. Done right, smart regulations can help ensure that America and American business have the capacity to operate and have the license to operate and innovate and simultaneously promote the health and welfare of our employees, our families, and our communities. Done wrong, they impose massive costs on U.S. companies, often with no demonstrable benefit. They become a drag on economic growth and investment, and that means ultimately a drag on job creation. That is something none of us can afford, and is why our report calls for a comprehensive plan for systemic regulatory reform. We've identified 7 specific regulations as being particularly problematic, and we call upon the administration to act now, modify, or withdraw them. The reforms outlined in this report constitute a smarter approach that achieves, in our view, the goal of regulation without impairing economic growth and job creation. We know it's achievable. I'm now going to turn it over to Bob McDonald, who led our policy development process on another key area, which is sound fiscal policy and competitive taxation. Bob.
Thanks, Andrew. I'm very pleased to be here today to talk about this report. Getting both tax and fiscal policy right is absolutely essential to getting America back on track and putting Americans back to work. Our message to the federal government on fiscal policy is simple and straightforward. Get your house in order and get started on the task right now. Waiting only makes it harder. We're calling upon Congress and the administration to achieve a balanced federal budget, excluding interest payments on the debt within the next 5 years. There are great ideas out there for accomplishing this goal, including many of the recommendations contained in the Bowles-Simpson and Rivlin-Domenici plans. Washington needs to get this done. The most effective way to balance the federal budget, of course, is to get America's economy growing again. And for that, we need a business environment that makes it easier for U.S. companies to invest and to grow. It's no secret that America has one of the least competitive corporate tax systems in the world. And in just 3 weeks, when Japan lowers its rate, the United States will have the highest average combined corporate tax rate in the world, nearly 15% higher than the OECD average. These uncompetitive rates are a disincentive for investment, shifting and stifling economic growth and slowing job creation. If we're going to drive business growth in the United States and expand economic opportunity for American workers and families, we've got to change that. We're calling upon Congress and the administration to adopt a competitive U.S. corporate tax rate comparable to the OECD average and a competitive territorial tax system similar to the rest of the world. A modern, streamlined, and fiscally responsible tax system will create a more competitive business environment that attracts new investment and supports strong economic growth and job creation. We've been talking about this for a long time. Now is the time to get it done. Thank you.
John. Well, ladies and gentlemen, we're group CEOs. They run on time, so it's an on-time completion of the program. 15 minutes for question. Back row, we'll start with you.
Wall Street Journal. Wanted to check it. How many pending regulations would you like to see changed? Is it 7 or 8? And can you specifically talk about changes you'd like to see to the Volcker rule and other parts of Dodd-Frank?
Okay, there's 7 that we've identified that can be written into the legislative process straight away. There's 8 in the book, and so we are not picking particularly the 7 or 8. We are focused on all 8. I think there's no question that on the Volcker rule and the Dodd-Frank, I mean, I would tell you that at the end of the day, there's a lot we don't know. And one of the things we talk about in both of these is engage us at the front end, pick a few specifics to engage the business community. Let's work out some answers together, and then let's get the spirit of compromise into this conversation towards the end. We don't understand the costs of anything right now. We don't have the details of many of these things, whether it be in the Volcker rule or the Dodd-Frank legislation. And I think we basically are saying, let's start picking the pieces that you really care about and we care about. We don't want to be regulated, not to speak as a banker, I'm not, there's a few of them around me here, but we don't want to import European regulations. That's a system that's not working. Why do we bring the denominator into our country? We have great, viable banks, and we should allow them to operate with smart regulation that allows them to allocate capital to all of us so we can grow America, and that would be one specific that we could talk to.
I might mention also there is a reference in the report to a series of other regulatory changes and issues that you might look up. So there's the ones that are singled out, and there's many others that are also very important. We couldn't, for purposes of brevity, list everything, but I say look up the website. You'll find many others. Might be some interesting examples in there as well, some that we think are very important. Yes.
Hi, my name is Michelle Hirsch. I'm from the Fiscal Times. I wanted to ask, is there widespread agreement among the Roundtable about which tax incentives in the code would need to either be reduced or eliminated to get the corporate tax rate lower?
I'll let our chairman of the committee, Bob McDonald, answer that.
Michelle, we believe that the best thing to do is to start with a white sheet of paper, eliminate the subsidies, and work to get as low a rate as possible. We think we can get to a 25% tax rate. And then importantly, as I said, is we need to move from a worldwide system which disadvantages all of us versus our global competitors because they don't have a worldwide system, to a territorial system where we would have a level playing field with the international companies that we compete with. We think we can get there. We have proposals to get there. We're working with the Ways and Means Committee. We're working with the Finance Committee. We're working with the Secretary of the Treasury. We think we know how to get there. And as I said, we're going to have the highest rate in the world. So all we have to do is look at what other countries have done, and we understand that we're uncompetitive. Thank you.
I think one other thing we might add to that also is the fact that 60 provisions of the tax code expired on December 31 of last year. Another 41 are slated to expire at the end of this year. That'll leave us with over 100 expired provisions of the tax code, and the other part of reform is to write a permanent tax code so we actually have a tax code again versus a series of provisions that are expiring all the time. And that just simply defeats everybody's effort to plan longer term. I think, all right, right beside you. I'll go. Just raise your hand. I'll try to catch you in no particular order, and then I'll do it. You on the front row afterwards with the white.
Hi, I'm Austin from Bloomberg TV. Last night, Obama spoke to you guys, and in his speech said that only modest measures are needed to trim the budget deficit. What are your thoughts on that?
Well, President's comments, is that a White House release, or, I mean, that was an off-the-record session. Yeah, I think we would, this is a conversation that's ongoing. Obviously, the problem, as we heard from the Blue Dogs this morning, is very substantial. Simpson Bowles made that clear. Dave Cody, a member of that commission, was here last night and very involved in this debate. We think there's for the deficit and getting our fiscal house in order, there is a comprehensive strategy required, and we're a long way from having that in place, but we'll see where we go on that. Not going to comment directly on his comments to us last night because we had said that would be an off-the-record session. Right, front row.
I'm Andrea Shalal, Isa with Reuters, and I wanted to ask you about the tension between, for instance, the cuts that are affecting the defense industry, and we're talking there about government spending that is supporting, hundreds of thousands of jobs. I mean, how do you stand as a group, and perhaps Mr. McNerney, on the issue of, what do you do about defense spending and sequestration, the threat of sequestration?
Okay, I'll let Jim McNerney comment on this.
The whole super committee, their work was supposed to be encouraged by triggers that no one would be willing to live with, one of which was related to defense, other entitlements, and this other discretionary expenditure. I guess it's a sign of the times that those draconian sword of Damocles kinds of measures had no impact. Okay, they still couldn't reach agreement. So it would be a significantly negative impact if sequestration was implemented next year, on top of the cuts that have already been taken. I think those of us in the defense industry realize that some cuts are needed along with a lot of other cuts. I think sequestration is a bridge too far in the minds of Secretary Panetta. I'll let him speak for himself on the subject. But I think it's our view that we all have to share the pain, even though sequestration was never really contemplated when they put this thing together. So probably does represent a bridge too far. Hopefully it will continue to provide encouragement to get something done. So as you know, it's not over yet, and that still hangs out there.
I think we'll go over here. We haven't had one on this side of the room, so.
Thank you. Tim Devaney, Washington Times. I had a question for Mr. McNerney. Last year, the NLRB, attacked Boeing, and they created a lot of uncertainty. I was wondering, do you think that uncertainty is going to continue for businesses in the coming year, and what can be done to solve those problems?
Well, I think the centerpiece of, or one of the centerpieces of Andrew's roadmap forward is smarter regulation. I think that discussion is mindful of the experiences that many of us have had over the last couple of years, where our interaction with agencies seemed to be non-productive, seemed to be arbitrary in its implementation by the government, and occasionally appeared to be politically motivated to us. And we're hoping to get things into a more constructive state, as Andrew laid out. I think it's our impression that the administration wants to work with us on that, but we're all impressed with the difficulty of actually getting down to the kind of constructive behavior that balances the needs of economic growth with the proper needs, as Andrew pointed out, for regulation, science-based regulation. We don't think that's in balance now at all, and we need to get there, and it's down in the trenches where the action is. At the top, we all talk to each other in very right-minded kinds of platitudes, but we got to get down to the behavioral level, and that's what Andrew's way forward encourages. So we're hopeful that we can put it on a new level of discussion. Sure.
You will try to relocate other companies in the future? Sorry.
I really can't speak for the NLRB. You know, I mean, I think, you know, we ended up where our customers and where our shareholders and our employees should be, but we shouldn't have had to go through it.
Oh, let's see. Oh boy, I got 4 hands here. Let me jump right over here, then come back up here, and I'll try to go back there and get that all done next 7 minutes.
Hi, I'm John McKinnon from the Wall Street Journal. Do you think that tax reform should focus on corporations? Should it also include all other kinds of businesses? Should it include everyone? And, you know, what's your timeline? How do you see it proceeding?
Let me make a comment, and then maybe Bob will want to elaborate on this, but I don't think we have a choice anymore because everything's expiring at the end of the year. With these 101 provisions, if nothing's done, you have a $5.4 trillion tax increase on the American public as individuals and families, as small unincorporated businesses, or as major corporations. That is a very substantial tax hike at the end of the year that will happen if nothing happens. So clearly everything is sort of in this stew, and that has lots of risks all the way around. We certainly think that some aspects of the tax code impact directly our ability to compete internationally and globally. That's really important, and that is an area we're lagging today, and Bob McDonald addressed that earlier. So you'd think we'd want to deal with that. We also have an economy that's pretty slow moving, 1.7 economic growth last year. You'd like to see that better, and tax rates have an impact on that. So this debate is an important one. There's no doubt it'll be talked about for, 8 months from today, we'll know if the president has been reelected or if we are looking at a transition. So over the next 8 months, there's going to be a lot of conversation about this. But one of the Blue Dogs made the observation this morning, you're putting an awful lot into a very small period of time, a small window after the election.
I think the governor said it well. It's the holistic change is needed, but as we've worked on the corporate tax rate, we've done it in a way where we believe we can get to a 25% rate and a territorial versus worldwide system and do it in a fiscally responsible way. So we're not talking about raising the rates on individuals or S corporations or anything else. We're talking about reforming the tax code. Also, as the governor said, the worldwide system punishes U.S.-based companies. Our international competition doesn't have a worldwide system that they have to deal with. And I know oftentimes an excuse is used that a worldwide system creates jobs in the United States, and that's just a fallacious assumption. Most of us invest everywhere in the world. We don't make a choice, do we invest in the United States or do we invest in China? We invest in both places because that's where the world's consumers are. We have to invest in both places, and that's where we grow. And it's also a fallacious assumption to believe that by building a factory, say to serve Chinese consumers or Malaysian consumers, we're somehow penalizing American workers. I know in the Procter & Gamble company, 20% of our jobs in the United States depend upon our international business. 40% of our jobs in the state of Ohio depend upon our international business. So if we're not growing our business internationally, we're punishing U.S. workers, and that's what a worldwide system does. Unlevel playing field, uncompetitive versus competition, punishes U.S. workers who work on the international business of multinational companies.
Right here in the front row. I think you had. Oh, wait for the mic, sorry.
Hi, I'm Ramad Hani from USA Today. I just had a quick question about reauthorization of the Ex-Im Bank, which affects, I know, many of you. Do you get the sense that Congress understands the importance to get this done soon? And is there any sort of greater concern? Club for Growth has basically said, you vote for this, we're going to hold your feet under the fire.
How about letting Doug Oberhelman answer that one, since he's the chair of our International Engagement Committee and he's been working on this?
It's a good question, and certainly in the scope today. In effect, the Ex-Im Bank does not require American taxpayer support. And we are in the thick of that right now. We're working with both sides of the aisle to try to figure out a way to extend the Ex-Im Bank life. We need to compete globally. A lot of our competitors do things with export credit agencies that we don't do with Ex-Im Bank. So in effect, that it penalizes us as exporters from the United States on goods and services that we can provide in the export market. We need the Ex-Im Bank.
But the whole tension with functional growth is this going to have a bunch of sort of short-term extensions? Can you afford another short-term extension?
We really can't afford another short-term extension. We need to plan a longer-term horizon. Having said that, we've got some things to do to fix Ex-Im Bank and make it competitive on a world stage, which we're working as well with. And it's going to take both sides of the aisle to get that done.
I had somebody, I think it was right, yeah, gentleman on the aisle.
Alan Gomez, also with USA Today. I understand much of the focus here has been on Americans and getting them back to work. But in your discussions with the President, internal to talks just this last week amongst yourselves, has there been any discussion about the legal immigration system and getting some of the workers in here that your companies obviously need?
I think that we'll answer that just simply, that there is broad support for immigration reform at the Business Roundtable. We believe it's a national priority. Disappointed that we haven't been able to move on that. And it appears that while there's a lot of support individually for pieces of immigration reform, everything seems to be tied into comprehensive immigration reform. We believe immigration reform needs to happen in America. We do think it's positive for economic growth. We certainly think it's positive for an innovation agenda. We just need to get it done. And, you know, we heard a lot of talk about this from a lot of people on both sides of the aisle. We need a good faith effort. There's been no real comprehensive proposal put in front of the Congress. That's where you'd start. But I think if done right, there can be immigration reform and everybody walks away a winner. And I think that'll be the last question, unless there's some burning question. It's 9:59. We're done. Thank you very much for coming.